Hey everyone, welcome back to Corporate Decoder, the place where we turn corporate jargon into plain English. And today we're diving into a filing that's all about a significant money move by Evergy Metro, a company that powers a lot of homes and businesses. Evergy Inc. is a big player in the energy world, and this report is actually a combined effort from them and their subsidiary Evergy Metro Inc. Think of it like this: Evergy is the parent company and Evergy Metro is a key part of its operations. This filing is an 8K, which is basically a way for companies to announce major events that shareholders really need to know about. And what's the big news here? It all centers around August of 2025. This is when Evergy Metro, a part of the Evergy family, made a pretty substantial financial deal. They issued a whopping $400 million worth of bonds. Now, what exactly are bonds? Imagine a company needs a lot of cash to do things like build new power plants or upgrade their equipment. Instead of just borrowing from a bank, they can sell bonds to investors. It's like an IOU where the company promises to pay back the money later plus interest. These are called mortgage bonds and they're often backed by specific assets the company owns, kind of like a house acts as collateral for a mortgage. The specific bonds Evergy Metro issued are called the 5.125% mortgage bonds. Series 2025 due 25, that means they're paying a 5.125% interest rate on the money they borrowed, and they have to pay it all back by the year 2035. This is a pretty standard way for utility companies which have massive infrastructure needs to raise capital. They're essentially getting a loan from a lot of investors at once to fund their long-term projects. To get this done, they entered into what's called an underwriting agreement. This agreement is with a group of financial institutions like Ben Y. Mellon Capital Markets, Citigroup, Goldman Sachs, and JP Morgan. These are the underwriters. Their job is to help the company sell these bonds to investors and ensure the deal goes smoothly. They help manage the whole process, from pricing the bonds to finding buyers. This issuance was also registered under the Securities Act of 1933. This is a very important piece of legislation from way back when that's designed to protect investors by requiring companies to be transparent about their finances and business when they offer securities like these bonds to the public. It means Evergy Metro had to provide a lot of detailed information to the Securities and Exchange Commission, or the SEC, which oversees these market activities to make sure everything is fair and square. The actual document outlining the terms of this agreement between Evergy Metro and the underwriters is filed as Exhibit 1.1. This is where all the nitty-gritty details of the deal are laid out. Then there's Exhibit 4.1, which is the 22nd supplemental indenture. An indenture is a legal document that basically lays down the rules for the bonds, like how the interest will be paid and what happens if the company can't pay. This specific one is between Evergy Metro and UMB Bank, acting as the trustee. The trustee's role is to represent the bondholders, meaning the people who bought the bonds, and make sure Evergy Metro keeps its promises. We also see Exhibit 5.1, which is an opinion from Heather A. Humphrey, who holds a pretty important title: Senior Vice President, General Counsel, and Corporate Secretary. In simpler terms, she's a top lawyer at the company. Her opinion likely covers the legality of the bond issuance, confirming that everything is above board from a legal perspective. And included within that legal opinion is Exhibit 23.1. A consent from Heather A. Humphrey. This just means she's giving her permission for her legal opinion to be part of this public filing. Finally, Exhibit 104 is the cover page interactive data file. This is a modern touch using something called XBRL, which is a way to tag financial information so that computers can easily read and process it. It makes it much easier for analysts and investors to crunch the numbers and compare companies. Now, this filing doesn't contain the detailed income statements or balance sheets we typically see in a quarterly or annual report. It's focused on a specific event, the issuance of these bonds. So we can't do a deep dive into revenue growth or profit margins based on this particular document. However, we can infer a few things. The fact that Evergy Metro is issuing $400 million speaks to their capital needs and their confidence in their future ability to repay this debt backed by their assets. This is a significant amount of money, and it signals that the company is likely undertaking large projects such as upgrades to their power grid, investments in renewable energy sources, or perhaps expansion of their services. When a company like Evergy Metro takes on debt, especially in the form of mortgage bonds, it's a strategic decision. They're essentially saying, we believe we can generate enough revenue and cash flow from our operations to not only pay the interest on this debt, but also to repay the principal amount when it's due. The 5.25% interest rate is a key indicator of their borrowing costs. This rate would have been determined by market conditions at the time, the company's creditworthiness, and the perceived risk associated with these specific bonds. For a stable, regulated utility company, this rate likely reflects a relatively low risk compared to other types of businesses. The involvement of major financial institutions like Goldman Sachs and JP Morgan as underwriters underscores the significance of this transaction and the thorough process involved in bringing such a large debt offering to the market. These firms have expertise in assessing risk, valuing securities, and connecting issuers with investors. Let's look at the overall picture here. Evergy, the parent company, is a utility provider. Utilities are generally considered stable investments because people always need electricity and natural gas. However, they are also heavily regulated, meaning their prices and operations are subject to government oversight. This can limit their growth potential, but also provides a certain level of predictability and stability. Evergy Metro, as a DOS subsidiary, plays a crucial role in delivering these services. Look at stability and stability. Evergy Metro, as a subsidiary, plays a crucial role in delivering these services. So what does this bond issuance truly mean for Evergy and its investors? It means the company is funding its future. This $400 million will be deployed into assets that are expected to generate returns for years to come. The success of this debt issuance suggests that investors have confidence in Evergy Metro's ability to manage its operations and meet its financial obligations. However, it's crucial to remember that debt is a double-edged sword. While it can fuel growth, it also increases financial risk. If Evergy Metro's projected revenues don't materialize, or if they face unexpected operational challenges, servicing this debt could become a strain. We'd need to look at their broader financial statements, like their balance sheet, to see their overall debt load and their income statement to assess their ability to cover interest payments with their earnings, to get a full picture of their financial health. But based on this filing alone, the story is clear. Evergy Metro is raising substantial capital to invest in its infrastructure and future operations, confident in its ability to manage the associated debt. They're using a well-established and regulated method for funding, backed by legal assurances and facilitated by major financial players. Now, looking at these results more broadly, and even though this filing is about debt issuance rather than direct financial performance, it implies a certain level of confidence in the company's future cash flows. Utility companies operate on long-term planning, and raising $400 million is a significant commitment to future investments. We need to consider these investments in the context of the broader energy landscape, which is rapidly evolving with a focus on sustainability and renewable energy. Evergy Metro's ability to successfully integrate these new capital sources into strategic, forward-looking projects will be key to its long-term success. Our take on this, Evergy Metro is making a substantial bet on its future. This bond issuance is a sign of proactive financial management, securing funds for necessary investments. The key for investors will be to monitor how effectively this capital is deployed and whether the company can generate sufficient returns to comfortably manage this new debt. The stability of the utility sector is a strong foundation, but adaptability to evolving energy demands and regulations will be crucial. Alright, that's our breakdown of Evergy Metro's significant bond issuance. What's your take on this large-scale debt financing and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord community linked in the description below, where we break down these stories even further. Thanks for watching, see you next time.